All right, welcome back to the show. I am joined. Tucker's been here the whole time because we did a crosstalk with Tucker, who is one of the top mortgage originators nationally, and also here in the Pacific Northwest. He is with Guild Mortgage for the past 6 years. Welcome back to the show. Let's talk about these loan level price adjustments. What is all the hype about these things here?
Yeah, so Dan, a big kind of media blitz has come through regarding the lenders changing how we price different loans for different credit profiles. So that's really the bulk of it is people's perception of, are we going to charge somebody more or less based on their credit score, down payment, and those factors?
Okay, so who are these loan level price adjustments for?
They're for everybody.
Okay,
Yeah.
and actually, did we define them? What are they? Where they show up on the balance sheet?
Yeah. So interest rates are really a reflection of the risk that the borrower presents to the bank, right? It's a risk analysis and how risky is Dan for defaulting on the loan. So specific to you, we're using you as the example. You're the borrower. You present a risk level, so credit score and what goes into that credit score. So on-time payments versus late payments, how leveraged are you? These types of factors, they tell us, or overall, they tell lenders how likely is this person for a potential default, and then we charge appropriately for that risk that we're taking on by offering you a home loan.
Okay, is that amount disclosed to the borrower?
Yeah, it can be. It depends on the transparency of the lender, but yeah, that is something that we can show a borrower. Typically, they're just going to see the resulting points or the charge associated with any interest rate that they're going to select. But yeah, a good lender will show you, again, using you as the example, and say, "Hey, Dan, here's your interest rate options, and here's what is built into that rate." And those loan level price adjustments are set or and scheduled by the HFA, which is the organization that manages Fannie Mae and Freddie Mac. They kind of pass it down and they say, here's the default risks. Here's what we're seeing in home loans across the board. And here's what you're allowed to charge certain credit profiles. And then we just pass it on through.
Okay, and so that I can share with our watchers or listeners is when they look at the line item and it comes up with the loan origination cost. Is it going to be in just that item, or is it going to be a sub item of it?
It depends on the disclosure, but yeah, it is in the origination form or points.
Mhm.
And the points is usually a subtotal of these adjustments. So
Okay.
there's usually a base fee and then some add-ons based on this credit profile.
Okay, cool. So essentially, as a borrower, when you get your official lock and rate sheet, you should be able to provide them with what that cost from you, the lender, is, and if they want to go more into specifics, you can help them with that.
Absolutely.
All
Yeah.
right, cool. All right, so the purpose of the loan level price adjustments, I think we kind of talked about that. So does that, I think here's the bottom line. The big question, the big newsmaker was that people with great credit are going to be helping people, being penalized, paying more to the benefit of people with crummy credit.
Right, exactly. That really was the kind of the media spin on it. People with great credit profiles are still going to pay less than people with poor credit. So I think that's the first kind of myth that we should debunk is they're not going to pay more. What they're doing is they're basically just not hammering the bad credit profiles as bad. And so the way it's looked at is like if we're not going to charge those people as much, we must be charging these other people more, right? That's just how it was perceived. But in reality, this is a move in the HFA or HFFA or whatever the acronym is. They do this regularly. They're always adjusting these things. And the goal is to try to create homeownership opportunities. How do we tweak these things to help people from renting into homeownership and build wealth? And so that's what they're doing. They're just saying, hey, there's been this market of people in the country that have been underserved. They haven't been given the same opportunity to buy because we are charging them more. How do we help them? How do we get them to be able to afford homes in the market that we just talked about, right? Homes are priced high. If we then charge them a crazy interest rate as well, they can't then compete against the better credit profile. So we're just trying to kind of bring the market together and offer a more level playing field for everybody.
Yeah, and I think this can kind of transition, and maybe we'll talk about this next week, Tucker, is
Yeah,
down payment assistance programs. You know,
sure.
these have administrative costs to them. They're actually down payment assistance where they're grants that money is put out for a down payment for somebody, and it doesn't take any. There's no actual payments on those down payment assistance programs. And contrary to what a lot of people may think, is that even though Seattle has a high cost of living, there are down payment assistance programs that are actually helping buyers right now buy a home in the area. So let's talk a little bit about that next week. How's that sound?
Yeah, I would love that.
All right, cool. Well, Tucker, how do people get a hold of you?
I'm on all the major platforms. So LinkedIn, Facebook, Tucker Maxwell. You can also just Google Tucker Maxwell and Guild Mortgage and I'll come up.
Awesome. Very good. Thank you so much for coming on. Now, I'm just going to close this out right here. I forgot the biggest reason for moving to the Seattle area, and that is my Huskies, right? Let's go
That's right.
Dogs. So great football team. The Cougars are way far away, so don't worry about them. They don't win anyways. Love you, Kaylin, to my daughter, who is a graduate of the Washington State University. Anyhow, thank you guys for watching. For more content on, moving to the area, reach out to the Eastside Real Estate team. I'm Dan Edwards, managing broker of the team. This is Tucker Maxwell. Wait, right over there, Tucker Maxwell. We thank you guys for watching.